Starting with a company called Sysco. Now, before you get confused, this is not Cisco, C-I-S-C-O, which is a company that manufactures network switches and the Internet of Things and all of this stuff. This is Sysco, S-Y-S-C-O, right? North American food service operator. 425,000 separate customers, restaurants, healthcare facilities, that means hospitals, educational facilities, that means the lunch lady at your school, lodging establishments, that's a funny way of saying hotels. And bed and breakfast, yes. I suppose. And it's got a market cap of $29.5 billion. Not tremendously enormous, but much bigger than anything we've got here. Price earnings ratio 29.5, dividend yield of 2.46. So this one looks like a pretty substantial player. It's the largest in the US in this particular chosen niche.
Yep. You got 2 or 3 players in the US. You got this. You got US Foods.
In fact, these guys tried to buy US Foods or merge, and it was denied them by the regulators.
And what they did is they went out and bought a company in the UK called Brakes.
Right.
And that has been...
Brakes, as in...
B-R-A-K-E-S.
Yes, correct.
And that's given them a big impetus. It certainly hasn't put the brake on this at all. It's propelled them into a new sphere. Because without that, if you strip out the Brakes acquisition, then the growth wasn't really that wonderful. So I think they need to be acquiring a few companies now.
Because I noticed, looking back at the history, they had a few problems. In 2013, they ran into a little difficulty as they were expanding into the southern part of the US. They developed some distribution network infrastructure where they didn't observe the full cold chain all the way through. They had what are called drop sites. Because, you know, if you've got a sizable distribution network and then you've got to have places which are coming and going, smaller trucks, bigger trucks, and they got into some trouble. And of course, if you let prepared chicken, for example, stand overnight in an unrefrigerated environment, that's definitely not a good idea. Anyway, they sorted those problems out. They've gone from strength to strength. They've benefited enormously in recent times, though, from reduced fuel prices because of the oil price coming down. So isn't that a bit of a concern? Because, I mean, at the end of the day, that's got to be a key cost input for these groups.
Oh, no, absolutely. And with all companies like this, whichever part of the food chain they're in, transport is a huge part of it. It's a logistics company, effectively, at the end of the day.
It's a specialized logistics company.
Yes.
So where some people specialize in, picking up and distributing computer parts, what these guys do is pick up and distribute food products, and then in addition to that, they've got facilities where they do some of the food preparation items, the chopping up and the
just to put some color on what you were talking about in terms of cold chain. If you take Woolworths, and I remember them telling us a few years ago at a presentation, I think the food being taken off the truck into the store, there's a tolerance of 0.5 degree centigrade, and it's got to be done within 20 minutes. Otherwise, the food's condemned. So I imagine Sysco and others would have similar types of tolerances.
Absolutely, because if you're in the restaurant game, you've got a specific price point that you want, for example, for your fillet steaks, and you want them delivered pre-cut, ready for the griller. And you can, of course, say, right, I want the one that costs X, Y, or Z, which is grade A, B, or C. So, you've got to be sure that you're getting exactly what you want, because that's got to give you the desired output.
Exactly.
Let's have a look at the share price. Now, what's quite interesting about this one is the notch at the end there, because there was some concern in the middle of October that maybe this thing had gone a little bit too high. It started coming off, and then it delivered very nice earnings. So it's rebounded, and it's currently trading at its all-time high. And that put paid to all of the naysayers who were saying that it was overvalued, because at a 30 PE, it was starting to look a bit toasty. But, like I said, it got the business done, and it indicated that it was actually benefiting. Their best kind of customer are kind of organic and specialist restaurant. As you can imagine, their worst kind of customer is a hospital, because, the people aren't going to be complaining. Well, they are going to be complaining about the hospital food, but what are you going to do? So the margins are, of course, the fattest, where they have these specialist type operators. Okay, so now we've got to go hot or not. I mean, it looks fairly expensive. It's trading at its all-time high. Yet you are saying that you think the Trump future of the economy is just going to be more services, etc.
No, look, I think the industry will do well. I'm positive on that. I think Cisco's a little bit expensive, though, Paul, given the fact, as you say, it's close on a 30 times PE. It's had the boost from Brakes. I think I'd rather be in US Foods.
Interesting. Okay, well, I'm going to go hot on Sysco. Haven't yet bought any, and we don't have any money in the portfolio, but it's a stock we've liked a lot over the times that we've been watching it.